The one big, beautiful bill passed and it's
That's right.
officially rolled out. I don't play a lot of into the hoopla of bills before they're passed. So I don't really research things while they're on the docket. Do you?
I do.
Oh, do you? Okay, good for you.
I
I
do.
don't. I don't waste my time until it's stamped and signed and in law, and it's here. And so today we
Which
want to
is
talk
probably
about
smart,
that.
Jake, because a lot of things changed in a few
Yeah, I
weeks up
don't.
to the time where it gets signed.
Yeah, yeah. So again, Congress has passed it. It's a sweeping 870-page law, Cory, that reshapes taxes, healthcare, education, and much more. And so for today's show, whether you're a retiree, a business owner, or investor, this legislation has significant implications for your financial future. And Cory, today you and I are going to unpack some of that. All right. So it's been, abbreviated the OBBBA, right? We'll just call it the bill. All right. Whatever. We don't need to talk the beautiful bill the whole time. So the bill introduces extensive changes, Cory, across various sectors. And this is the issue. It makes it challenging to fully understand its impact on an individual's financial plan and their investments. And many of the provisions, to make it more complicated, Cory, have income thresholds, phase outs, or even expiration dates. So that adds even more complexity to financial planning, which, Cory, that's job security for you and I.
That's right.
And the bill's breadth means that nearly every American will be impacted in some way. So this is a necessity that, and I'm glad our audience is paying attention to today's show because it's going to impact probably, I can't say everybody, but it's going to be a lot of Americans are going to be impacted in some form or manner, or if not, your family members are. Do you have any thoughts on this, Cory?
I agree with you, Jake. I think if you pay taxes, you'll be impacted one way or the other. And that's really
Good.
what we're aiming to unpack here today.
All right, good. So here's the opportunity, Cory. So by dissecting the Beautiful Bill Act, we can identify strategic opportunities for tax savings, investment adjustments, or even estate planning. Now, again, there's no guarantee, but that's what we're doing for our clients. We're going to dissect this. And today we're going to go into the details of some of the changes that have made just to get our audience thinking about things. And we
Good.
want to go over the nuances that allow proactive decision making to optimize financial income. So this is an exciting opportunity for us. I get excited when laws change. Do you, Cory?
I do. Yeah, it is. I think changing things up is not necessarily a bad thing, but you also need to understand what it means. And that's what we're talking about today.
And the changes aren't always good. Sometimes they're bad. But again, I think laws get stale. And so whatever you want to look at it, I told people this. I'm not saying I'm Nostradamus here, Cory, but I told people when the Republicans controlled the House and the Senate and the White House that things were going to be volatile because changes could happen easier. This is what I'm talking about. So the changes happened because it was easier. And that's where we're at today. And so today's episode aims to equip our audience with the knowledge to navigate these changes effectively. All right. So let's get into them, Cory. I got a lot of key provisions. You being my guest, I'm going to let you kind of kick us off here with number one. And that's the tax brackets. So, Cory, why don't you inform our audience on what has changed with the tax brackets?
I think the main thing for people to know, Jake, and a big takeaway from this whole bill that can actually get lost is that this is the primary function of it, right? The permanent extension of the Tax Cuts and Jobs Act income brackets. So those went into place in 2017, 2018, when the legislation was initially passed, expected to phase out or sunset at the end of this year. The reality, though, is with the passage of this, it eliminates that uncertainty for future tax rates for the years ahead here in the short term. And that I do expect to generally be a positive for people, Jake, because the uncertainty around it has been removed. But tax brackets aren't going to change at the end of this year like they were going to if this bill didn't pass.
Right. That's what I wanted you to start with. That's good that you got there, Cory. So
I saved at the beginning for the end.
Yeah, so that's what's changed. So to be clear for our audience, many people's tax brackets were set to increase starting in 2026. Now that is not going to happen, which is really good news for a lot of people, right? Because now we don't have to worry about your tax bracket going up. However, I want to be clear, permanent doesn't mean forever. It just means there's not going to be a sunsetting period, meaning it probably will change, Cory. However, it's going to take another bill to change it. So there's not an expiration on your tax bracket, which is great, which allows our financial planning group to readjust your plan accordingly. Because frankly, Cory, with our clients, they've been factoring in that your taxes were going to go up.
Correct.
So for most all, unless they manually overrid the system. But for most of our clients, I would suggest, Cory, that their financial plans may look slightly better now because we have that tax rate not necessarily going up. Now, again, this doesn't apply to everybody, so there's no guarantee. It's all on a one-on-one basis. But my point is, if we were planning for your bracket to go up because of this sunset provision, taking place next year, and now it's not, your plan should actually look a little bit better, which is cool. And
Yep, that's good.
I can't
Good way
wait
to
to
put it.
hear towards the end. I want to talk about all these cuts, Cory, but I want to hear your soapbox on what this really means for America, though, because I know you were fired up about this.
All right, if that's what you want, I'll save it.
So,
you just ask, Jake.
Yeah. Okay. Yeah, I did ask.
Okay.
We'll wait till
I'll
the
save
end
it
on
though.
that one.
Let's move on.
All right. So they bumped up the standard deduction. Many people are having to file that standard deduction now because it is quite a bit higher than it was in previous years. But the good news is they're just bumping that up a little bit. So not a huge deal. Some would argue that's maybe factored in for inflation and should have been bumped up anyways. But regardless, it's been increased slightly on that. Do you have any thoughts on that, Cory? Do you have the details on that one? I don't have those in front of me.
The new standard deductions, $15,750 for a single individual, $31,500 for married filing jointly for 2025.
Good. So it comes effective this year. Fantastic.
Yes. Yep.
Okay,
and it was before this was signed, Jake, just for clarity. Before it was signed, those numbers were 15,000 and 30,000. Now they're 15,750 and 31,500 respectively.
All right. So there's another one, Cory. How about this one, Cory? You can talk about this one. No tax on tips.
Right.
Do you know the details of this?
Yeah. So up to $25,000 tips and overtime is exempt from taxes, which I would expect. Jake, I was talking to the UPS driver that comes by our office, and he was talking about how much of a game changer that's actually going to be for him because of the way that his time card works, the hours that he works. Not having to pay tax on that overtime is going to result in more money in his pocket.
Yeah, that's fantastic. Now there are phase out restrictions.
Phase-outs.
So I think it's 150 grand and then 300 grand if you're married filing jointly. I saw something, Cory, that if you're married and file separately, that you're actually not eligible for this at all. So something to think about on your filing status. If you're married and filing separately, you want to check in with your CPA on this and see if you need to adjust some things. Someone also told me, Cory, they're like, yeah, but they don't claim their tips on cash. I'm like, well, they're supposed to. But so, because they're like, those are already tax free. I'm like, well, they're not supposed to be.
Right.
So anyway, so this is a good one. Yeah, it's a good one and you can't magically, like Cory and I can't magically start accepting tips from our clients so that we could potentially deduct it, or anybody on our team for that matter. I imagine you and I, Cory, are far out of that phase out range, but people on our team can't start taking, so don't start tipping our team thinking that they're going to be able to not
tax free.
Yeah, your industry has to be one that is normally tipped, right? Or has overtime. So again, we don't, that's interesting, Cory, though, for our company. Maybe we should consider, we don't, most all of our employees are exempt, so there is no overtime here either. But something to think about if you're an employer or if you're an employee, just understand what that is. And again, check in with your CPA on this. There's another one,
Jake,
Cory.
I think all of this has just changed for clarity for everyone, is that right now is the time for tax planning. Personally, for business owners, et cetera. In light of all of this changing, right now is the time for it, not the very end of the year.
Yes. Good point, Cory. I like it. You can also deduct, Cory, auto loan interest.
Yeah.
So up to 10 grand on that per year, but the car has to be US assembled. And then to make it nice and more complicated, the car has to be purchased between 2025 and 2028. So again, lots of nuances here. Do some tax planning. But I have no idea if my car was assembled in the USA or not. Do you? I bet mine wasn't.
I think that mine was, but I don't know for sure, for certain.
Yeah.
For some reason, I'm thinking South Carolina. But either way, it is if you're in the market or going to be in the market for a new vehicle, right? This is something to consider.
Right. Quick time out here for commercial. Thank you to all of our subscribers for following along and listening. Please give our show a thumbs up, 5-star rating if you think it's any good. The reason that we record Upticks is to enhance financial literacy. And actually, we have an exclusive offer for our audience. If you click on the link here in the show notes, you can go out there and get a free copy, Cory, of my ebook, Retiring Right, Smart Steps for Exiting Corporate America, where I lay down 150 action-packed pages on retirement planning. It's really the fundamentals. You're not going to find stuff about the one big, beautiful bill act in there, obviously, because this is more timely. However, you are going to be able to get a lot of the foundational work that you need to start thinking about as you prepare for retirement. I also have a physical copy. If you want a real copy, you can go out there and buy it on Amazon, but I'm happy to send you the digital copy for free. So again, that's available to our audience. And then I'm out there on Instagram, Jake_Falcon_CRPC, and Cory is Cory Bittner KC. Let's get into some retirement perks here, Cory.
Okay, let's do it.
I posted about this next one, the senior bonus deduction. And somebody put on there, commented that it's a perk of being old or retired or older. And they're right. So individuals 65 and older, Cory, can now get a $6,000 deduction on their taxes. So $12,000 for couples. But there are phase out ranges for this one as well. Do you have any thoughts on this one, Cory?
Yes. Yeah, I think that this was, Jake, there was a conversation around the taxation of Social Security, right? And I think that this senior bonus deduction is a way to hopefully help more people pay less income tax on their Social Security benefits. But yeah, it's definitely a perk. It's another thing for tax planning. And the reality is that the people in that same age group, Jake, are also the people that are subject to required minimum distributions. Well, I mean, it's a bit older, but the point remains,
that's
65 and older. That the point there, though, is that the senior bonus deduction certainly helps, particularly when people have some constraints around their taxable income.
So that's a good one. Again, I was actually talking to somebody about this. So there are phase out ranges.
Yep.
I believe it's 75,000 if you're single and 150,000 if you're married. So you want to be careful. So if you can manage your income, right, whether you're working or IRA distributions to try to take advantage of this, you want to be strategic about that. Cory, we're probably not going to say that enough in this show, but this is now the time to do tax planning. We're in the middle of the year as we're recording this. I think any time in the third or fourth quarter is good, but don't wait till December because you might be able to change some things about your income now so that you can take advantage of this later. And you don't want to wait and be over this and have nothing you can do and look. And your accountant, the worst thing that accountants do, Cory, is they tell people, oh, you did this, but you should have done this, but nobody told them, right? Nobody gave them awareness to what's going on. And that's what we do at Falcon Wealth Advisors, our financial planning group. They have tax planning software and they will give you that awareness of what you need to do so that your accountant's not saying, oh, you really messed this one up, Cory. You should have done this.
Here's what you should have done.
Yeah, it's too late. I don't want to hear that. I want to proactively plan.
Yeah.
So again, now's the time to start doing that. And be patient. Be patient with us and your seat. Because again, like we talked about in the beginning, this is brand new. Like this is just came out. 870, and these are not action-packed pages, by the way, of this bill.
That's true.
To comb through. I haven't read the whole thing. I'll be transparent. I get it all filtered down, and then we go into the weeds where we need to go in the weeds. Have you read the whole thing, Cory? I don't plan on it, by the way. I'm not a CPA.
I've not read it start to finish, but I've downloaded the full document, the PDF.
Good for you, Cory.
And I've gone through a number of the pages, and you're right. There's a lot there. And it is not action-packed.
It's not entertaining, trust me.
No, that I agree with.
All right, so the estate taxes exemption has increased. This is effective next year to $15 million per individual. So that's really useful in estate planning. It's already high. I think it's already, what is it, Cory? Probably 12, 13, 14 million.
Correct. Yeah.
So it's just 13. Bumped up a little bit. The good news is very few people fall. If you're married, you have $30 million. So basically your estate's not going to get taxed unless if you're married, unless it's over 30 million. So a lot of people don't have to worry about this, but if you do, and you need to do some estate planning, it's good to know what these exemptions are so that you can, again, plan for it. And many of our clients, though, Cory, they'll be over that 15 or 30 million mark, in 20 or 30 years. So again, more to plan, more things to do. That number can change, though. So again, I don't want you to, if your financial plan is projected to have $40 million in 40 years, I don't want you to freak out and start scrambling because that number is probably going to change over the next 40 years.
Yeah, that's
Thoughts
right.
on this one, Cory?
Yeah, I mean, it's changed a lot, Jake, just in the 15 years that you and I have worked together, and that number's moved higher. The practical reality for people, though, is if there is less tax that is hitting someone's estate when funds are transferring from one generation to the next, that's really inherently what's happening here. And I don't think that's I think for most people, for their tax planning and estate planning, that's a positive.
Yeah, absolutely. All right, Cory, you want to talk about the 529 plan expansion?
Yeah, so the 529 plan, which again, you're making contributions. There's a lot of benefits around the 529 plan from a tax standpoint for an individual. But the reason that people use 529 plans, Jake, is because of qualified expenses for, K through 12, even after in higher education, college, right? So the 529 plan expansion extends qualified expenses to include tutoring and caregiver certifications for what funds from a 529 can be used for.
Pretty cool, right? So if
Mhm.
your kiddo needs a tutor, you can use your 529 to pay for that. I think that's awesome, actually.
Yeah, and the caregiver certifications.
What do you mean by that? Do you understand that one?
Here it is. I'm gonna read this to you exactly. So the caregiver certifications. This is what I mean when I want to get it right. The caregiver certifications demonstrate that an individual has the necessary training and skills to provide professional care to patients. So this could be nursing homes, assisted living facilities, home health settings.
Very cool.
Yep.
Very cool. So you can use a 529 to get a caregiver certification
Correct.
to help elderly people.
Like a home health aide, personal care
Yeah.
aide, even a CNA, certified nursing assistant.
Which I think is fantastic, Corey, because frankly, we're probably going to need more of those people as the baby boomers get older, continue to get older.
Absolutely.
So that's awesome. And you know what? In my opinion, Corey, this doesn't hurt the government debt at all because it's not really a loss in revenue for the government because this was money that was already earmarked for education. So it's not like the government's missing out by expanding the 529, in my opinion.
I got you. Yeah.
So I
Yeah. I
think
mean,
that's
it's
a good
really
one.
just that people are putting the money in and it's just a matter of what other expenses you can
Yeah,
spend
they
the
can use
money
it
on.
for
Yep.
different stuff, which I think is pretty cool.
Agreed.
All right, Corey, what about this one? The Trump accounts? Are you going to be opening up one of these? I guess your kid's already born. So basically, it's $1,000 government funded account for kids born between 2025 and 2028 with tax deferred growth. I think this, whether you like Trump or not, I think this is a very egotistical, the Cory account. What if you were president and you started the Bittner
You need the
account?
Cory account, Jake.
I mean, that's kind of crazy that he named it after himself, or whoever wrote this and named it after him. But I guess it's cool for people that are trying to put more money away for kiddos. It's tax deferred growth, but a UTMA kind of gets that because your kid doesn't really pay taxes anyway. So I don't really get it. I guess the government's putting money in there though, so it's $1,000 from the government, which is cool,
Yep.
I guess. So
yeah,
something to
every
be aware
newborn
of.
American, proud owner of a Trump account, Jake.
Yeah, I don't know
I
about
think that's
that.
the
I
way
don't
I
know.
understand it.
I don't like affiliating with either party, and so I think that's a little weird that they called it that, but whatever. I'm sure the Democrats are going to take advantage of it, which is weird. I'm not saying they shouldn't. I'm saying they should, but like again, if you're eligible for this, if you have a kid this year or in the next few years, and you're eligible to get $1,000 from the government, why wouldn't you do it? Do you see any reason why you wouldn't do it unless you really hate Trump that much?
It's probably the real reason. No, I don't think so. I don't think so. I think the contributions you make to it, like there could be more effective ways to do that. But in terms of like the actual, I guess, a seed from the government, it's interesting. It's interesting.
Yeah.
But I don't see what the downside would be if they just wanted to give you the money.
Right. Right. The U.S. raised the debt ceiling also by $5 trillion. I know you're probably mad about that, Corey, but they raised the debt ceiling so they could spend more. It's a sad reality. They need to do that or the government shuts down. So they have to do it, but they also need to cut their spending. But that's part of this One Big Beautiful Bill Act as well. Corey, there's a lot more in here. Is there anything else that you wanted to bring to our audience's attention today? We kind of hit some of the big ones that are most impactful. But is there something I missed that you wanted to bring up?
Yeah, the one big piece, Jake, that I wanted to bring up today that I think is probably relevant for a lot of people that are watching or listening to the show is the Affordable Care Act subsidy reductions. That basically those were set. This has made certain that after 2025, the Affordable Care Act subsidies will be reduced and will basically revert back to what things were like before 2021 when the American Rescue Plan was put into place. So the $400 federal poverty limit comes back into play in terms of the cost for healthcare that people who are not yet on Medicare are going to have. So I think that is one big change from the last several years that will require tax planning. Go ahead.
So what does that say in English? Tell me what that's going to mean to our audience.
If someone is not on Medicare yet, if they are
Right.
getting any kind of Affordable Care Act subsidy, that those subsidies are going to be reduced, which a practical reality is the cost for healthcare may be higher because the actual cliff is coming back into place. And that's what was removed a couple of years ago.
Got it. I remember when that was removed, you're like, this is a big deal.
Yes, because a lot of people were able to get more. The reality, Jake, is that the cost for the healthcare didn't change. It was just a matter of who was paying for it. But now if the subsidy piece is reduced, I expect that is going to have an effect on, it's going to cost more money if you have any sort of income in retirement, because the 400, I was looking at it, Jake, the 400% of the federal poverty level is, I think it's just over $60,000. So what has been different the last few years is that people's income was above that. They may still get some sort of subsidy, but just at a reduced rate. Now it's reverting back to just being a cliff, that if your income is above that, no more subsidies.
So it was phased in and out, and now it's a cliff.
Yep. Which is not inherently part of the bill, Jake, that was just signed, but this did make it certain that that's not going to be extended beyond this year.
Got it. So I was going to ask that. So it becomes effect 2026?
Yes.
Got it. Thank you for sharing that one.
So healthcare cost planning after this year for people who are not yet on Medicare is really something to check in on in 2025.
So this is a very good point, though. So again, you're 60 years old, you're not on Medicare, you're on the Affordable Care Act, you're getting this subsidy reduction. It's probably going to be reduced. So we need to meet and go over your financial plan and factor in what that increased cost potentially is going to be, right?
Correct.
And that's a very important one.
It's a big one.
So what's crazy though is that we may have had though, Cory, for a client, their tax rate going up starting next year, but still being in this, having this subsidy reduction. Well, now their tax rate's going to stay the same, but their reduction is going to be less. So it could be a wash is my point. So I don't want people, the whole point of this show is not to freak people out. It's really to explain some of the details, which hopefully we've done a good job of, is to explain some of these details and really point out that you need to meet. You need to meet with your financial planner and your tax advisor to go over some of these rules and see how they impact you. The big ones, again, are the biggest one, in my opinion, Cory, is that the tax rates are staying the same.
For sure.
That's
the biggest one.
If you're over 65, that credit's really big. And then it kind of just, it's, and this is why we talked about at the beginning of the show, Cory, how it's going to impact so many Americans. Because if you're having a baby, it could impact you. If you've got a car loan, it can impact you. If you work for tips or get overtime, it can impact you. If you're retired, it can impact you. If you're on Medicaid, it can impact you. If you're getting the Affordable Care Act health insurance, it certainly could impact you. And so this is why it's touching so many different people. And we got to, and it pays to plan, because if there's little changes we can shift in your financial plan to take advantage of some of these new benefits, then we're certainly going to help you do that and make sure that it all makes sense. Good, Cory. I know you're a gun owner. This eliminates the $200 tax on certain firearms. So you're going to go buy another gun?
Not in my plans.
Okay.
Not in my plans.
Fair enough. But hey, that's still kind of cool, I guess. I don't know the details of that one.
I think so.
But there's a reduction in tax on firearms. That's just another one. I mean, we could go, there's 870 pages, remember? We could go on and on and on and on and on. Yeah. There's a lot to sift through. All right, so let's go over the myth. Because I think a lot of people are thinking this, is that the bill eliminates taxes on Social Security benefits. And you already alluded to this myth that I wanted to bust today, Cory, but go ahead, bust it.
Not true. So the taxation of Social Security at the federal level has not been changed to 0%. The reality is that while the senior bonus deduction may reduce taxable income, it does not eliminate taxes on Social Security benefits, especially for higher income earners. And that deduction, again, some people collect Social Security, Jake, before age 65. So again, there's that extra deduction is not in place until age 65.
Good point. If you're 64 and you're getting Social Security, you're not going to get any deduction.
Correct.
That's good, Cory. So yeah, myth busted. Perfect. So Cory, we've got some time for your opinion, but I just want to recap this before we get into your opinion section here. Is that the One Big Beautiful Bill Act introduces significant changes clearly across various sectors, impacting taxes, healthcare. Thank you for bringing that up, Cory, education, and more. So you got to understand these provisions, and it's crucial for effective financial and tax planning. And being proactive about these strategies can help mitigate potential negative impacts later in life. Because the last thing we want, Cory, is our clients saying, oh, I didn't know about that, or oh, I wish I would have done that. Let's not do that. Let's be proactive. We're in the middle of the year here. Let's capitalize on these new opportunities and be aware and plan for if you're going to have any negative impacts on here. So here's my call to action for our audience, Cory, is please message Luke at falconwealthadvisors.com. If you want to set up a planning session at Falcon Wealth Advisors, we do proactive financial, retirement, and tax planning. Again, we are not tax advisors, but we can certainly map out some of this and plan this for you. And let's talk about your personal situation. So if you're a client already, you're already getting this, but if you want to meet sooner than your normal review, let Luke know, and we're happy to do that. If you're not a client and you want to go through our signature planning process, let Luke know. That's where you'll meet with me or Cory. The first meeting, first we need to build a plan for you, and then we can see what we can do to optimize it, but we're happy to do that for potential clients as well. Be sure to tune into our next episode of Upticks. Also, Cory, all right, now it's time for our soapbox, Cory. So What is your opinion? What is your opinion of this bill? No facts here, Cory. I just want to hear a raw opinion. What do you think? Is this good for America or bad?
Bad.
All right, let's hear it.
The reason being that the signal to me, Jake, this is my opinion, is that nobody in Washington, D.C. has any desire to get the budget or the debt under control. And if we look back at the first half of this year, Jake, with DOGE, with cost cutting, this idea of fiscal responsibility, for the government to say we're going to raise the debt ceiling by $5 trillion, we're going to cut funding from Medicaid, et cetera.
Hold on. Well, I'm going to jump on your soapbox here because I don't always necessarily agree. What about the tariffs, though? Wouldn't you suggest the tariffs are going to help offset some of these cuts? What are your thoughts on that?
Trillions of dollars? I don't think so.
And what about, I think DOGE has been blown up because Elon and Trump couldn't play nice together. But that doesn't mean, Cory, that they're still not cutting things. So you still don't think that they're going to cut a substantial amount to help offset some of these? Because you got to remember, too, the uber wealthy people, they are still fronting a lot of the tax payments for our government. And this didn't lower, like many of these perks, Cory, are phased out for the uber wealthy. The only thing the uber wealthy really benefited from are that the tax brackets didn't go up. Most everything that I've researched and read, Cory, they're phased out. They're not getting any of this stuff. We didn't even bring up the SALT deduction. The state and local tax is going from 10,000 to 40,000. But Cory, if you make really good income, you don't get that. You're still at 10,000. So I haven't penciled the math, and it probably is impossible to do that. But so you still think this is bad even after my counterclaim that,
yes,
look, Cory, they're cutting things. The uber wealthy aren't getting a break. We're really helping middle America here. What's so bad about that?
What's so bad about that? So helping middle America, Jake, is not bad. What I'm saying is that I think increasing the debt ceiling by another $5 trillion, that this bill.
But what's the alternative? The government shuts down?
No, the alternative is you actually cut spending that actually makes a difference. Like this year, Jake, the government is going to spend more money on servicing the government's debt. Their interest expense is going to be more than they spend on the military and defense in the whole year.
Well, that's why Trump wants to cut interest rates, which I don't necessarily agree with, but that's why everyone knows servicing the debt is so expensive because interest rates are higher.
I think it's because of all the debt, Jake. That's why it's so expensive.
Yeah, that's true too.
But
that's true too. You're right. Right.
If the debt wasn't there, we'd be less worried about the rates.
Yes, but aren't they? But they are. So you're saying even though they've cut a lot of fat, you're saying they just replaced it with more fat.
Yes, I'm not saying that they cut a lot of fat at all. I'm saying that they're just adding more. They're borrowing more money, and the government is to make it real simple, Jake. Like my perspective on this, because it's not. I don't want this to be misconstrued as a political comment, because there's plenty of evidence around the way that politicians from both parties have handled this issue for the 15 years, Jake, that you and I have worked together. And my point is, it's like the revenue that the government brings in and how much money the government spends have just decoupled from each other. So if they're going to spend whatever they want to spend anyway, it just sort of it'd be different if the tax rates were going to cover the spending, but they're just not. And we're not pretending like they're going to. So my point is, at some point, does that mean that tax rates are going to go up? What does that mean for the value of the dollar? Those are just the big picture things that I think about, Jake, because we work with people that plan for retirement. I have a 1-year-old daughter at home. I think a lot about the future for everyone. And while I can't predict it, and I won't pretend that I can, I think that planning for it is crucial. And I think that what I'm talking about today, Jake, is not fear-mongering. I think it's a 2025 and beyond reality check. It's my opinion.
But I get all that, and I appreciate that. But my point is, do you think they did this then just to get reelected at the midterms?
I don't know.
Because why would they do that? I mean, what you're saying is pretty obvious, Cory. And I like what you said, that they're not congruent, right? The revenue coming in does not match the expenses. And so if you and I ran our households like that, we'd be in deep trouble. And you're saying the government America's in deep trouble, and this isn't helping that.
Yes.
I see that. But I also think the tariffs renegotiated, further cutting the fat is helping Americans, I guess, with some of these cuts, hopefully keep spending more money and keep the economy going. I don't know the answer. Again, it's above my pay grade kind of thing, but I appreciate your opinion. And I don't like an 870 page bill. And I guess that was the whole point. One big, beautiful bill. But my argument, I talked to my wife about this, is that we feel like it should have been sliced up, because they start layering in all these things and they negotiate and they're trading favors for each other. And next thing you get is like, does it really help anybody? Like you mentioned, like if somebody's on the Affordable Care Act and they're paying more now for their insurance, but their tax bracket didn't go up, did it really help them?
Right.
Who is it helping?
Right.
Is it helping anybody? And if it's hurting the government and not helping anybody, then what are we doing? I think we're doing it to get reelected.
That's fair,
That's
man.
my suspicion.
That's totally fair.
Is that I think they're doing it to keep the power, because for me, government is all about power, Cory.
You're right.
And you make the people happy, they vote you in. So think about this. Think about how many people this is going to benefit. You can almost find it benefits you. It benefits me because my bracket didn't go up. Does that mean I want to vote in the current Congress people? I don't know. I don't know that yet. But like, I just want to challenge Americans to think about that. Like, and I really appreciate your perspective on this, that like, you're not saying Democrat or Republican. You're saying there's still a problem that's not being addressed and you don't like that.
Correct.
And
When I think about the future for all of us.
Yeah. And I think the common American, though, Cory, all they think about is, how does this benefit me?
Right. Right. But
they're not thinking about the future. And I don't get too caught up in the future. I do financial planning, obviously. However, Cory, I recognize that the future is we don't know the future. And modeling, which is what we do, is imperfect. I recognize that, but we have to do something. We have to model and do something.
Agreed.
And then we have to be flexible and change with the rules as they change. So again, the whole point of Upticks today was to get a little bit deeper. Forgive Cory and I if we weren't perfectly in tune with all of this. It's 870 pages, but we wanted to bring some awareness to it. And the key here is, let's set up a meeting. If you have a nuance that applies to you, I can assure you that our financial planners will go and research the heck out of that nuance and get you an answer as it applies to your financial plan. This show is not advice. It's meant to be educational and informational, and hopefully that's what we provide today. So thank you, Cory, for your opinion.
Of course.
Thank you for doing some research with me, and thank you all for tuning in. We hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website at www.falconwealthadvisors.com and click the Contact Us button if you'd like to meet with Jake and his team.